Hey there, I'm Apple Crider with Investing Simple. In this video, we're taking an in-depth look at how margin works on Webull versus Robinhood. These are two of the most popular investing apps for stocks these days. They both do offer margin investing, but in this video, we're going to compare and contrast the margin between the two of them so you can decide which one makes more sense for you in terms of cost, ease of use, limitations, and all of that good stuff. So first off, what actually is margin? Well, basically, margin is a way for you to invest with borrowed funds. So you can borrow money from Robinhood or Webull to invest with. This can both magnify your gains as well as your losses. At the same time, you're also going to be paying interest for that money. So essentially, let's say you had $10,000 in your Webull account, but you wanted to magnify your investing ability. You could borrow another $10,000 from Webull, invest that 20 grand and kind of magnify your returns either way. That is margin investing. So now let's dive in and compare these two platforms head to head. Well, first off, if you want to start margin investing, you need something called a margin account. And both Webull and Robinhood offer margin accounts to their investors. With Webull, you can invest in a margin account absolutely for free, no fees involved, except for that interest payment that we're going to be talking about in a little bit. With Robinhood, you need a $5 per month Robinhood Gold subscription in order to invest on margin. Now, with Webull margin, you're going to be able to trade up to 4 times the amount of buying power you have in your Webull account. So for example, say you've got 10 grand in that Webull account. With Webull margin, you can trade up to $40,000 worth of buying power with that $10,000 of cash. With Robinhood, you're capped at 2x buying power. So if you got that same $10,000 of cash in your Robinhood account, you can only trade up to $20,000 on margin as opposed to the $40,000 you would get on Webull. Now keep in mind that with that Webull margin, that's only allowed during the day. So they give you 4x margin during the day. Overnight, it's only 2x margin. So before the trading day ends, you have to actually make sure that your margin is no more than 2x. With Robinhood, it is 2x during the day, 2x at night, it's 2x all around. But with Robinhood, this 2x rate can actually vary from person to person. So you want to make sure you check your margin available within your Robinhood account to make sure you know exactly how much margin Robinhood's actually extending to you. Because in some cases, they might not extend you that full 2x. So you have to make sure that you actually go into your account and check that out first. Now, both platforms are going to have a $2,000 minimum account balance in order to trade margin. So if you only have $1,000 in your Robinhood account or your Webull account, you're not going to be able to trade on margin. So make sure that you have at least 2 grand before you try to transact on margin. Additionally, with both platforms, you're going to be paying interest on the funds that you borrow. That interest is going to accrue daily and be charged to you monthly. So every single day, depending on how much margin you have extended to you, they're going to kind of add that to your balance. And then once a month, they're going to send you that bill. With Robinhood, the bill is going to come with your $5 per month Robinhood Gold subscription because again, like I said, you have to be paying for that subscription in order to get access to margin. Now, the margin rates on Robinhood are going to be quite a bit cheaper than the margin rates on Webull, at least for now. These are both subject to change whenever either platform wants to change their rates, but for now, on Robinhood, it's a flat 2.5% margin interest on all of your margin trading. They also don't charge interest on the first $1,000 of margin you borrow because that's covered by your $5 per month subscription. Anything beyond that, you're paying 2.5% in interest. With Webull, you're looking at a flexible interest rate on your margin, anywhere from 3.99% up to 6.99%. At the time of recording this video. That is going to decrease as you borrow more from Webull, but it's going to start off on the high end around that 7% mark and then work its way all the way down to 4%. So the real trade-off here is that you get more buying power with Webull, you get that 4x margin, but with Robinhood, you're paying a lower interest rate, but you do have to have that $5 per month Robinhood Gold subscription. So you got to kind of weigh the pros and cons, depends on how much margin you're actually going to be borrowing and whether you want the 4x or the 2x is going to determine which one is going to be better for you. Now, I also want to mention that there are some serious risks that you should consider whenever you do think about investing on margin. The first of which is that if you invest in something that goes down in value and you have borrowed money to invest in that thing, you're going to owe that person the money back that you borrowed. Your losses are going to be magnified because you're losing both on your own investment and on that money that you borrowed. You're also owing interest in the process. On top of that, the person that you're borrowing from, in this case either Webull or Robinhood, can issue you what's called a margin call that is basically going to require you to either deposit more money into your investment or to sell at a loss. If they feel your position is getting too risky, they're going to say, hey, you either got to add more money of your own or you need to sell out of this because we're not comfortable taking on this additional risks. The third thing they could do is just sell your position without even asking you. So if they feel it's gotten too risky, they can just sell your position at a loss, you take that loss, and there's really nothing you can do about it at that point. So it is really important to be careful with margin if you are a complete beginner. As you get more experience with investing, it might make sense to add this in down the line, but as a beginner, you probably don't need to be messing with margin at all. Now, if you want to learn more about Robinhood or Webull, we have comprehensive video tutorials on both of them that you can check out right here. So whichever one of these platforms is more interesting to you, just check out that video, and I'll see you over there.